Hello and welcome back. My name is Brandon Watson. Today in this video we're going to be going over a few stocks that I think will be good for the month of December. We'll also go over a few of the old watch lists that I created to see how those were performing, and we'll just take it from there. So again, if you found any of this information helpful, I ask that you please like and subscribe to the channel. It will help me continue to pump out more content for y'all. I certainly appreciate every like and subscribe, and I hope that we can continue to make money together. So we're going to start off by going over some of the old watch lists. We have first the October 31st watch list. They're rather short, so we'll just run through it. October 31st. This is the 29th here. Let's do this. Yeah. 31st. So this is 10:30, 11:02 right here. This would have been the next day. So from the bottom of that, for ACHC, you could have made 31.58% in 22 days had you played that perfectly. And we're not perfect, so we'll say you could have maybe gotten about 20 to 25% rather comfortably inside of this trend here, making higher lows, higher highs every day until it topped out and finally started to retrace back to the 42 level. Where is this line coming from here? You'll see that came all the way back from March of 2018 on the weekly and built slightly over it. Didn't touch it yet, but technically speaking, it could always still kind of come down. We'll see. Next one, ACM. Looking for, okay, here we are, 11:02. Right here on this day, popped up for those 2 days up to 11:03, came back down. So if anything, we would have started small, maybe 10 shares, worked our way in, saw that we dropped down, just held on to those on the daily with a small loss, since we just would have gone in with test shares, and from the bottom could have started to scale in to another 20% run in a month. That's not that great. We could have done better, and we kind of did do better, but we'll continue to go on. AROC from 11:02 had a nice trend, pushed over the 200 EMA, held, and went up 51% in a month. That would have been nice. That would have been nice. AVTR, well, we all know what happened to AVTR. AEM 11:02 pushed up for 4 days up to that resistance at 85 that we topped out at here before breaking down, and has not come back ever since. So that was gold. If you watch any of my past videos, you know I don't like trading gold. ELF, it doesn't matter how good the pattern is, I just am not a fan of it. ELF on 11:02. 11:02 was right here, so we popped up for 3 days before dropping back down, and I would have just forgotten about it after that. It did end up going back up, but that's not a pattern that I would be fond of. 20%, you would have had to go through this 12% drop, and there are better plays out there like this one, ARWR. I have an arrow here, so we must have found it on 1020-ish, and now we have it on the 1031 watch list, 1031, so 11:02. Did pop up quite nicely from the very first time we saw it. Then we have 11:02, which would be the next day for this 1031 watch list, and we popped up another 27%. So had you held from the very first video, 33% in a month. Pretty good. Pretty good. Not too bad. Pretty good. Next one, next watch list, 11/14, November 14. So let's see what we have here. 16, 13, 16 would be the next day. So we topped out after 2 days. Didn't really do much before dropping back down into this channel and still building off of the support here at 25.39 for AVTR. AVYA, what do we have? This was 11/14. So sure enough, we hit this zone up here, got rejected, and came back down to the $16 level before bouncing up. And had we gotten that, that'd be 28%, but again. That's not something I would have waited for. There were other plays out there. COOP on 11-14, 11-16. Popped up over this resistance here at 24.50. Held. Went up 12%, 12.5%. It's all right. It's all right. Look at this right here. FRHC. FRHC. We saw it on 11-14. This would have been the next day that we could have traded it. And it never came back since then. Been making higher lows. Went up 31% in 20 days. That's really good. IMGN. 11-16 is right here. So as you can see, could not make higher highs. Ended up coming back down to the 525 region before topping back out at 625. Again, not making higher highs. So IMGN is no good. No good. 11-16 held this level. Held this level here over 90. So had you got it, 11-16 just held it. Started off with some small shares, waited for that to bottom out at the EMA, could have started scaling in, would have had 11% in 11 days. ATI, this is the one that I'm still in. If you remember the last video on the watch list update, you would know that I said, just like AVDL, we want this to hold over the 200 EMA. And sure enough, it did. So the very next day that we could have held this, or bought this, would have been 11-16 after it hit this resistance that topped out here on 6.5 at what is that? That is a 12.6 level that was created, topped out, held that for 2 days before still trending higher. So had you bought the next day that we could have, the very first day, that would have been 33% in 19 days. Not bad. ATI, I'm still in it. I'm still in it. Actually, ATI ended up closing down some plants, some sheet metal plants, because they say that it wasn't as productive for them to produce that compared to whatever it is that they're going to be producing for the 757 MAX. So they closed those plants, shut down about 400 jobs, and they're going to be converting over to something a little bit more profitable for ATI. As of right now, I'm just going to continue to keep holding. There was an upgrade on it just this week for a price target of $16, and there was another one for a price target of $21. So we have already hit the 16 mark, and the next mark is going to be at 21. So if anyone were to consider this, I would definitely wait until this $16, $17 region here held. $17 exactly from back in February. And then if you do get 16 and it holds, or 17 and it holds this support, or mates a support, you can potentially get somewhere between 17%, maybe more if we decide to run, which would be 40% to where it was highs for the year at 24.17. So we'll see. We shall see. Next one, SPR, was another one similar to ATI. 13, yep, 13, boom. Next day held 200 EMA, popped over, held it for several days, and then went up a total of 35% in 20 days. So those two stocks that were related to the 757 MAX ended up doing quite well. Had anybody caught on to that? So something I want to go over real quick is BILI, BILI. So I know I called this one back, I don't remember which video, but I could have sworn I said that this was going to pop up. Let's see, I don't know when I actually created BILI Alert, but what ended up happening was either around this October region or November region, it ended up dropping back down. I know for a fact that it was probably going to push up, and I said that this could push through, which would be nice, but it ended up dropping back down again, making lower lows compared to back in late September, 40.50, and then another one, a new low at 42.65, picked up from there and has trended 60% in 25 days. So unfortunately I did not catch this run, but this is why we create watch list and try and keep our eye on it. I was already inside some other trends and really pushing it with how much I had inside each position. So I did not jump into this, and I actually did not even catch it until after this huge pop here, when I noticed that it came and followed through the 5250 resistance. So you kind of want to keep an eye on your watch list, and even though some of these might look like they might drop down, that doesn't mean that they're out. That doesn't mean that they're down for the count. So we're going to keep looking and try and catch the next one. Another one I want to go over real quick is BLDP and how we should have continued to watch this one. Unfortunately, back then I wasn't using really test shares. I was kind of just going in with it, and I had called this one out, I believe, on August 31st. So August 31st would have been this day here. We got in on the next day, which is September 1st. It dropped down, picked itself back up, topped out at that resistance, made 6.6% for the day before dropping back down. And this would have been a perfect example of just going in with maybe a share for the day and just skipping that initial rally, because you really don't want to chase into things, which we did. We ended up making a little bit of monies, which was good, and some people actually ended up missing out on it. Otherwise, if we would have started a little bit smaller, we could have rode this up from the $13 range after we dropped past this level that we created here and came back up the next day, which we held. So if we would have gotten from there, could have made 23% there, and sold. Could have gotten out, or could have gotten out, back in for a 37% run there. The second time, this one here would have been 16%, relatively speaking, of course. We're not talking about maximizing it and being perfect. That last run was 44%, and had you just held from the $13 range the very first day, after it bounced up to its highs, that would have been 63% in 2 months. Just over 2 months, which is pretty good if you have the guts to hold through this drop and then back through. What drop is that right there? That is a 24% drop on your profits after coming in at $13 range and then bouncing at 14.36 when you were just at $19. But that's the game we play. That's the game we play. So on to the next one. And real quick, actually, if you wanted to play this, you might be able to, if this is a bounce here. Let's see. Let's go and create another line. We got. Let's top that out about here. Based off of these candles at 1850, we fall through it here, but we kind of bounce at that region for 2 days. So going into the 1 hour. Going into the 1 hour, we have our EMAs crossing here. We're starting to hold, but we did drop back for after hours. If this continues to hold, you might be able to get 1850 if we come back and bounce off of it. I wouldn't really recommend trying to buy that. I would, of course, prefer to get like the $19 range. According to FinViz, BLDP has a price target, average price target of $23. So the last upgrade was August 24th for $22, although there was a downgrade on November 10th from buy to neutral. So I mean, that doesn't mean that anything, that doesn't really mean that it's going to have to, or it's going to collapse, but we'll see. What was November 10th? November 10th. Yeah, see, November 10th was all the way back here on this day. And ever since then, it's gone up 40%. So you don't always have to listen to downgrades. We could still follow through. And if we do, try and get about the 1920 to 1950 region. We'll just say 1950. Start scaling in from there because we want to start heading up. And we have an average price target of $23. So if we were to get $23, that's about a 18% push. And if not, then for one, we have to clear this $20 region, which is only 2.5%, and then 2150 level, which is 10%. So I would really rather it hold 1950 and build upon that before I would scale into it. And of course, I would scale in small before I start trying to build into that trend higher. So just be careful with how you go in. You don't have to go in with a ton of shares all at once, but that trend right there still looks kind of good to where we're bound. We could be consolidating off of 1838 and maybe bounce through into 22. This might even be a new consolidation zone if we start to bounce between that 19 to 22 region, which would be nice because that would be 14-15% that you just play back and forth a couple of times until we are ready to either push in either direction. So keep an eye on BLDP. Okay, next up, we have DAR, and I for sure have mentioned this one quite a bit. I always said I don't know how an ingredients company just can continue to keep going, but it still is. Over and over, I've been watching it and watching it. I can't believe I've never gotten into it. I've missed out on for sure 70%. But it looks like we're coming up and we're starting to break over this little resistance here around $49.50 to $50. We're peaking out over 50. So if we can bounce off of this $49.50 and then bounce through 50 or just hold 50, we could still be good for another push forward. Average price target on Finviz is 53.82. The highest upgrade that I can see was on September 29th for $54. Last price target was $47 on October 9th. Let's see, 47. So we're already over it. There's one other one on September 29th for 50 and 54. So let's see, we're already at 50. We maybe get 54. 54 is about 9%. And that's just the price target. Doesn't mean it's going to stop there. Does not mean it's going to stop there. Let's see here. We could potentially follow through on here. If you remember my last video on how to find a potential reversal, you would want to pay attention to this MACD down here, in which we are still making higher lows. And if this bottom line here, this exponential line, crosses over, we would still be making higher lows from this crossover point down here. And that's kind of what we want to see when we're making higher highs, is higher lows and higher highs on the MACD. RSI is pointing up. It's not overbought. We have a little squeeze here on the daily that's formed. We are overbought on the 1 hour, so be careful of that. I would want to see it retest 49.50 and hold before I started to scale in and see if we can test out that $50 to $54 range. So we'll see. We'll add that to the list. Okay, we have HOLX, which is Hologic Inc. And we already have some lines on here. We appear to have broken over a 73.40-ish range, which was a resistance, came back down to a support, actually dropped below it. I think that was due to their earnings. But it did catch itself at 64 before coming right back to the $68 support. And it seems to be following through into this 73.40, 73.35 resistance again. So if we can push through, average Finviz price target is 86.62. November 5th had a buy for $78 to $88, from $78 to $88. And then there was a downgrade from the same firm from a buy to a hold. So that was just 15 days later. I'm not too sure as to why they did that. But as of right now, price action is showing something a little bit different. Looking at the 1 hour, again, same as DAR. We need to hold over this resistance before I want to consider even scaling in. Otherwise, just wait for another drop back down to 68 and see if that holds the way that we did here between 67.30 and 69.20-ish. Wait for that little consolidation to form by that support. As long as that support holds, then we could see a range from 68 back up to 73, which is only 7.5%, and then eventually it might break out, which would of course break higher to, what was that, $86. If you were to go from 68 to 86, that is a 26% run, though if it doesn't come back and it actually holds 73.40 level, and we go to 86, that's about a 17% run, so we'll go ahead and add that to the list. It does have decent consolidation and movement, especially after that drop for their earnings, which already happened, so we don't really have to worry about it too much going forward for the time being. Okay, next up we have ACGL, moving over to the net scan on the EMAs. ACGL is a financial. They have an average price target on Finviz for 39.20. The last upgrade was resumed for a buy for $39. There was a January 6th upgrade from Wells Fargo from equal weight to overweight for $48. And then that was January. We topped out back in February at 48.32, so we did fulfill that before dropping all the way back down for the COVID, building up this consolidation in here for the last 4 months. Higher lows. What is this? July? Yeah, July 9th was a low of 26.22. September 24th, it was a low of 27.41. October 28th was a low of 28.55. Now we have a low here, November 30th on 31.91. So we're holding this level here as of right now around 32, which was kind of the resistance here where the 200 EMA was just about 3 months ago. We topped out several times, but we continue to make those higher lows. We're doing okay. EMAs are starting to cross. This was a nice candle that happened right here just on Friday. So going over to the 1 hour, we are extended, and I do expect this to kind of pull back, but we'll see where it pulls back to. If we can get something that kind of pulls into the 25 EMA, maybe we can get a retest around $33. And then we'll take it from there, really. Let's see here. So just in case it doesn't come back and we hit the highest price target of 48, which I am not sure, but we might be able to get this recovery here. $48 is 40%. But if we don't, then we have 4% to 36. And then potentially from this level here, around $40 back in March, early March, that could be roughly 18% if we do. This could take a while. So it'd probably be advisable just to scale in super small, but as long as this 200 EMA holds, you should be good to just kind of scale into that and take profits either around 36 or see where it goes from there. These are older upgrades. The last one was, I said, $39 for back in May, so anything could have changed from then. But we'll go ahead and add that just to kind of see where it goes. Not only that, but we'll also add a little arrow here, just that we know that we saw it. CHX. CHX is Champion X Corporation. On Finviz, they have a 15.45 average price target. Last upgrade was October 30th. From $13 to $18, it was reiterated to an outperform. Before that, they had 3 initiations, or 2 initiations and 1 upgrade in September for outperform, sector outperform for 12 to 1 for 12, 1 for 13, another one for $16. So we've already hit 2 of those targets. Next target is going to be $16, which from here could be about 12.5%, and then up to $18 could be about 27%, which is not bad. $27 would fall in line with this fake support that held for 2 days before falling through again. But we do have nice consolidation. just like ACGL, we are making higher lows. So let's go and throw that through here. Holding over this 200 EMA for right now. We'll dig deeper into the 1 hour. 1 hour is a little crazy. As you can see, for the last several days, we would push for 1, 2, 3, 4, 5 days before dropping for 1, 2, 3, 4 days. And we just have this pattern, pushes, drops. So right now we are at the top of a resistance. We're going to throw this here at 14.17. And as you can see, for after hours, we dropped down to 13.51, and that was only with 150 shares. So this is more than likely going to come back up for pre-market. But if it doesn't, and we end up coming back down, you can look for a double bottom off of 12 region, which would be 12 back up to 14, 17%. And you take that over to 18, and you're looking at over 40%. If it does go there. But if not, and it actually ends up holding this, well, that's still a good pattern. That's still a good pattern, similar to ATI, in which we held this 200 EMA and just kind of followed through. So that's what we're going to be looking for here on CHX, is that bounce and follow through into 18. And then we'll take it from there at 18 if it does reach it, because we could potentially go higher. It is an energy company, so it can definitely go higher if the timing is right. But since we are over this 200 EMA for now, wouldn't be a bad idea just to add it to the watch list, so we'll keep an eye on it. We have DVN right here. DVN stands for Devon Energy Corp. This is kind of the bounce I was referring to that we need for CHX. It's already doing it here. Held at 200 EMA, and we're starting to follow through. I'm not sure I would actually add this to the watch list. Average price target is 1670, which we're hitting right now on, according to FinViz. Largest price target is back in March for $24. And then the last several for those were for $6, $10, $15, $16. So we're kind of reaching on this one. But I did want to show you for the fact that this is exactly what we need for CHX. And then as I'm going through this watch list here, I'm actually noticing that there's a lot of these that are energy companies, and when I add the industry to the watch list, you can see, look at this, all of these right here. I'm not even going to count them, but out of this entire list that I'm scrolling through, a good chunk of it is energy, oil, gas. So it seems like something's going on with that sector. They're all starting to come up. And I'm not just saying it just to jump into any of them, but it is certainly interesting to see. So I did add DVN to the watch list just to kind of see. I'm not going to really do anything with it, but just thought it was interesting how a lot of these energy companies are starting to come up. So keep an eye on that going forward. EC is another one. ECG, or no, Eco Petrol, ECO, Eco Petrol. That price target is going to be, EC is going to be average price target of 12.86, which is exactly where we are at right now. Last upgrade with a price target was March 24th for $18. So it can go higher, but I'm just saying that some of these energy companies are all going up and pushing over that 200 EMA, which is not really easy to do. If you get that to flatten out and then turn up, that is really good to look forward to. Just real quick, because it shows up on the scanner, is OCUL, Ocular Therapeutics. As you can just see here, it is a beast. It has not stopped. It's still going. I should not have sold it around this region here, but I got back in and started to hold, so it's working out. But I cannot believe that since we first got into it as a team around this 740 region, that it has gone up 173% in just over 2 months. 2 months and 7 days. So if anybody held that, congratulations, it's still going. So it looks like those are the ones that I have for this week. Just going through the industries and looking at all of those. Like I said, a lot of them are oil and gas. A lot of them are going to be kind of looking the same, going over this 200 EMA. And what we need is just for them to push through. So you can see some of these have already started to push through as they hold. These are all energy companies. Go oil, see? They're all just pushing over that 200 EMA. So something's really going on with those. But aside from that, I'm not going to add any more to the watch list. We can play those and look into them. Make sure you do it smart. I might not actually play any of them except for maybe BLDP and DAR, but my main focus right now is OCUL and ATI, because that one is still going. I'm not sure how much that's going to push up before it comes back down and starts to consolidate off to the 9 EMA. So I would definitely want to lock in majority of profits before that happens, because we are extending up over it, and it's due for a round of consolidation sometime. I'm just not sure as to when. But aside from that, I certainly hope you all found this information helpful, and I thank you all for coming in. I hope you all have a great weekend. Take care.